GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we bring you crypto updates faster than Trump says it's huge. I'm your host, Jay Hamilton, and today we are joined by Bloomberg analyst James Seyffart. We're going to discuss Brian Armstrong. He said Bitcoin price is going to reach multi-millions if the US starts a strategic Bitcoin reserve. He said that on CNBC yesterday. AI coins are soaring after Trump announced a $500 billion investment in AI infrastructure along with OpenAI, that project called Stargate. Bitcoin ETF 800 million on Tuesday. ETH ETF up 75 million on Tuesday. Trump launches the SEC launches a crypto task force, but obviously Trump is behind that. So much to break down and discuss. And the ETF master is in the house today. Myself and the rest of the Milk Road team are constantly being asked for our opinion on tokens. Should I buy XRP? Is it too late to buy virtuals? Is there still opportunity for AIXBT? Well, we wanted to make sure you had a quick and easy way to get all this information from us. So the Milk Road team has been cooking, and they just launched the Token Center. The Token Center is your one-stop shop to get our rating on the top tokens. Each token is given a rating of bullish, bearish, or neutral. It's even color-coded, so it's super easy to digest. And our ratings aren't just random guesses. They're based on thorough examination of market performance, social sentiment, ecosystem growth, and a whole lot more. If you want to see what our ratings are for the top tokens right now, hit the QR code on the screen or the link in the show notes and head over to the Token Center to get the alpha today. Meet Odos, the DeFi aggregator that makes your token swap smarter, faster, and a whole lot easier. Tired of trading like it's 2019? Odos finds the best prices for your swaps across 900 liquidity sources and 14 blockchains, so you always get more bang for your crypto buck. Whether you're swapping, setting a limit order, or just avoiding gas fees like the plague, Odos has you covered. It's like having a genius trader in your pocket, minus the coffee addiction. Join 3 million wallets already using Odos to power over 6 billion in monthly trades. Start making smarter swaps today at milkroad.com/Odos. James, welcome back to the Milk Road Show.
What's going on? Thanks for having me. Happy to be
Yeah,
back.
man. Stoked to have you again. Let's start off with, everybody's talking about Trump. We haven't necessarily seen a ton from him on the crypto side, but I think good chance by the time this releases that there's been some executive orders from him related to crypto. So we haven't really seen that yet. But what is your reaction? What are your thoughts on what he's done so far in his first few days in office, and more so what the impact has been on crypto?
I mean, it's been like a whirlwind. I mean, even before his first few days, I mean, launching the Trump meme coin, which we can get into, I have thoughts there. But I mean, this is what he does. He dominates the news cycles, and a lot of people hate it, for better or for worse. It's entertaining nonetheless. I don't even know how many executive orders he signed. He's focused mostly on immigration and things like that. But on the crypto side of things, this overlaps more with the Libertarian Party than necessarily just crypto. But he did free Ross via a pardon. So that's promises made, promises kept. He's talked about doing some executive orders, and he's going to be pro-crypto. He's going to be the pro-crypto president. So what do I think he's going to do? We can get into that too. But like, he's going to do some sort of executive order, some sort of things in the next few days in relation to crypto. Will they be as positive as some sort of Bitcoin maxis and crypto maxis think they're going to be? I don't know. I think honestly, even if they're like kind of lukewarm executive orders in the crypto space, I think it's a huge win for the space. Now, are people going to dump on that news? Maybe. I honestly, I'm not personally somebody that thinks the U.S. government needs to be buying Bitcoin. I'm not a strategic Bitcoin reserve person. I mean, if it happens, it happens, but I'm not somebody out here screaming from the rooftops thinks it needs to happen. I don't think it needs to. We need it to stabilize the dollar. I don't think really it's that critical. And honestly, I'd prefer if individuals were able to get exposure to crypto and Bitcoin specifically before sovereigns like the U.S. Start getting involved. But like I said, it'd be good for anyone's bags who owns Bitcoin if he does it. But I think it's more likely that he's gonna, and this is not an out of consensus view, that the executive order, if he does do one about a strategic Bitcoin reserve or stockpile, as he calls it, it's going to be more so like we're going to keep the Bitcoins we have necessarily, then we're going to go out and buy Bitcoin. Obviously, there's ways he can do that without Congress right now, but one way is with Congress. So I don't know. I'm not somebody who thinks we need the strategic Bitcoin reserve.
Let's talk about this SEC task force. Can you tell us what this is?
Yeah, I mean, what it comes down to right now is the SEC, it's supposed to be 5 commissioners. Usually it's 2 of one, it's 2 of each party plus a chairman from the party in charge of coming from the president. So for the last however many years, it's been Gensler, who was run by Biden, and really Elizabeth Warren. So it was 3 Dems that had control. Right now, the SEC is just 3 commissioners. It's Mark Ueda, who's the acting chairman, Hester Peirce, who anyone listening to this probably knows who she is. She's very pro crypto, or at least she's pro like thoughtful, common sense approaches to crypto rather than just bash it into the ground in the way that the Dems have been. And then Crenshaw, who technically her term is over, but commissioners can stay up to 18 months beyond the term. Her term ended this summer. She's still there. So we have 2 Republicans. Crenshaw, though, has been left of Gensler in recent years. So she's like even more anti-crypto than Gensler has been for anyone out there. So, but really it's 2-1. We're going to get Atkins in probably within the next 5 months or so. No guarantee on when that's going to happen. Could happen way quicker than 5 months. But this crypto task force is just going to basically, who knows exactly what's going to come out of it, right? But what it comes down to is Hester has been saying she wants common sense approaches to handling the regulation of cryptocurrencies and digital assets. The CFTC has seemingly been more common sense about this as well. So she's going to basically work with the industry to come up with common sense rules and guidelines. For the most part, the last 5 years, you've had good actors like Kraken and Coinbase and Gemini. But you could argue some of the things that any of these people have done, maybe people don't like, but for the most part, they've been trying to come in and register. They want to be US regulated, and there's just been no way to do it. And the SEC is like, come in and register, we'll figure it out. And then they have meetings on top of meetings on top of meetings, and then the SEC sues you or sends out a Wells notice saying they're going to sue you and all these things. So I think what this task force is going to do is like, let's come up with clear common sense guidelines that people can follow right now or as quickly as possible. And then ultimately those guidelines will either be followed by Congress, or an act of Congress, or they'll just become kind of the rules of the road in the way that we've been following the rules of the road under Gensler. But these will be more common sense into like how these things should be handled. I'm hoping that this task force that Hester's going to be running is going to coordinate with the CFTC. But really at the end of the day, what you need to coordinate all of this, even you really need an act of Congress. You need a FIT 21, a crypto market structure bill to solve this. And the one thing I would say also is there's a closed door meeting on January 23rd. I think a lot of things over the next, few months are going to be determined, and they're going to talk it out in this closed door meeting on January 3rd. So I think, and these things aren't that crazy. They happen all the time. In many cases, they'll vote on different things that are coming up and decide what's going to happen. We have a lot of ETFs that have been filed, things like that. So I think they're going to coordinate and decide what they're going to do in this meeting. So I think this is a big week, and that meeting could determine a lot. Not necessarily, we'll see, but I think it could be very determinant in what happens in the coming months.
What do you expect their pace or their speed to be?
That's a good question. I think part of the problem is, like I said already, there's only 3 commissioners there. There's supposed to be 5. They can obviously operate with just 3. So I don't know. I don't know how much longer Crenshaw is going to be there. If I'm Atkins, I would want to like stall this stuff potentially. I mean, I don't know if he's going to be able to pull strings behind the curtains, or he's probably in talks with Hester, because Hester used to actually report into Paul Atkins when he was an SEC commissioner over a decade ago. So they have a friendly relationship. He speaks highly of her. I mean, she speaks highly of him. So does Mark Ueda speaks highly of him. So I'm assuming they're talking, but like if he's going to be the one in charge, he should be the one dictating. But right now, Mark Ueda is in charge. Hester's going to be running this task force. I think they'll move pretty quickly. It's just, I have a feeling they would like to slow things down until they can get like things properly handled. But also, if you look at any of the letters that Hester has written, that Mark has written in dissent of what the SEC has been doing, I think they are probably just so happy to finally go back to like handling this from a more libertarian point of view, like kind of like, let's make some rules of the road. And I think they can act rather quickly. And there's a lot of ETF filings out there that basically have things that need to be decided on before April. Like it's not the final deadline on these things the way they've been filed, which we can get into the nuances there. But like there's things that need to be decided by the beginning of April. So and possibly even before that. So I don't think that even if they wanted to slow things down, I think a lot of these issuers, a lot of these companies are really going to they're pushing the envelope here, and they're putting the pedal to the metal, they're pushing the pedal to the ground and trying to figure out what this SEC is going to allow. But I do think it's possible that the crypto world, I've been saying this for a long time, everyone's like, give us rules, give us guidelines, give us laws so we can follow them. And I think that's going to come. But I have a feeling that some of these rules and guidelines, even that Hester will come up with, some people might not be huge fans of, the cypherpunkus of the world, the more libertarian minded. There's going to be rules that come down from Congress, from the SEC, from CFTC that people aren't going to be happy with. But at the end of the day, my point of view is it'll be way better than anything we've had
Mhm.
since I've been covering the space.
Yeah. Let's you bring up the ETFs and I want to get there in a minute, but first, let's just talk about case like what's the impact of all of this? SEC having a task force. Yes, regulation is coming. We don't know when, we don't know how quickly, but already we are seeing the impact of this take place. So, Franklin Templeton CEO Jenny Johnson came out and she said, "Yeah, blockchain will ultimately be used to build ETFs and mutual funds. It's a better technology. It's more efficient for managing money markets." Bank of America CEO said, "Yeah, we're ready. We're in on crypto payments. We want this. We just were waiting for the regulation." Is there seems to be a TradFi-DeFi convergence that might be happening, and it might come quite quickly just because Trump is in office, especially with him launching a meme coin. He kind of signaled to everybody, "Hey, don't worry, guys. We're going to do all of this. Everybody's good."
Yeah, I mean, honestly, this is what I've expected and what I've been telling our clients. Like, if you look at all these banks, they've been doing a lot of stuff on the back end to try and custody these assets. There's been tons of talk about things they could potentially do with stable coins, and they've been completely hindered by the rules and regulations, by Congress, by the Elizabeth Warrens and Gary Genslers of the world from doing this. And so they've been building things quietly in the background. Even Jamie Dimon at JP Morgan, who's one of the biggest critics of Bitcoin and a lot of cryptocurrencies, I mean, they have their own blockchain on the back end. It's a private blockchain. They've been doing a lot of stuff with blockchain networks. So it's not surprising to me. I mean, you look at Franklin Templeton's, I would argue, is one of the leaders in the TradFi asset management space for saying that everything's going to be tokenized eventually. And they're doing a lot of work to try and build those bridges. Both the ETFs are a perfect example of taking a DeFi crypto digital asset from that system and putting it on the TradFi rails, right? Taking that. But we're also seeing tons of examples of Franklin Templeton doing the opposite. BlackRock is doing the opposite with their BitO fund. They're taking money markets funds and they're taking these TradFi assets and putting them on the DeFi crypto rails. And so I think there's going to be a lot of these TradFi institutions that are going to hire a bunch of people, or they already have people willing to do this, and they're going to continue to build those bridges. The one thing that I was so Franklin Templeton, Jenny saying those things was not surprising. She's been very pro crypto. I mean, you look at Fidelity; they've been early in the Bitcoin and crypto space. You have Van Eck that is very TradFi and pushing hard for this space. Bitwise started up. There are a lot of TradFi guys that now believe strongly. So I mean, no matter how you slice it, there's tons of people in this space that are trying to do this, or it's TradFi firms partnering, like Invesco partner with Galaxy and things like that. So the list goes on and on and on, and the list is going to extend in the coming years. Everyone's going to jump on board here. I think first it's going to be stable coins and payment rails and things like that are going to come via blockchains. But at the end of the day, that's what's coming, and you should be expecting this, because a lot of companies put a lot of money into trying to do some of this stuff years ago, and they were essentially stopped. And Trump is going to open the floodgates essentially for these TradFi companies to at least start trying things out. So I think it's a good thing for the space. I mean, there's some people that really won't like this. They'll think it as the institutions, the elite coming in and destroying the cypherpunk ideals. But honestly, if you're a full believer in this and you really believed in, full Bitcoin, hyper Bitcoinization or hyper tokenization or things like that, this was always going to happen at the end of the day. These people have a lot of money, they have a lot of assets, and they're smart. And if there's a trend that's going, they're going to jump on that trend and try to take advantage of it. And I mean, it's a free market, so we'll see what happens.
Yeah, I think it's very clear that the wave is now on. We've been talking about the institutional wave for probably too long. Sometimes, us talking heads like to say things, repeat it over and over, but the institutional wave really has not been here yet, right? Like they're buying Bitcoin ETF and the ETH ETF, but I don't even really know if they're doing that even that much, right? So,
Yeah.
I think that wave is finally coming, and I think it's going to come faster than most really anticipate.
The other thing I would say real quick is also, I don't know if I said this clearly, the Moynihan comments very, very much surprised me, because I've never really heard him talking too much. That might have just been me not knowing, but that was surprising. I said Franklin Templeton comments weren't that surprising, but Bank of America talking about this, I mean, that's one of the largest banks in the world, US, let alone world. So I don't know. That was a little surprising, but I think we're going to see more of that. Sorry.
Hey, let's chat about ETFs. What's the state of the ETF, crypto ETF market right now? There is so many filings. It's almost become too much to now to like it used to be simple. It was like, okay, Bitcoin, ETH, and then Sol, and then there's a few more. But now there's like a Doge ETF application, and I can't even keep track of it all. Can you kind of give us an overview?
Yeah, I mean, I actually have my screen shared of my current list. So if you
Okay,
want to throw that
let me
up for
bring that
anyone who
up.
actually
Yeah.
watches this and doesn't just listen like I do on your
Mhm.
iPhone while you're driving and things. But I mean, even if you can't read that, that's just a massive list of tickers that are filings that have been filed. For the most part, there's the most recent ones have to do with a lot of futures. Rex Osprey is going through a unique process or unique approach. I'll point that out real quick. It'll get too in the weeds, but there's 30 something filings here. A lot of the ones earlier on, they don't have basically to get approved. You have to go through two processes. You have to go through an S1 and a 19B4. 19B4 is the one where you have those deadlines, delays, approvals. Those are for products that are filed under the 33 Act and not under the 40 Act. Those are the ones that are going to be like your Bitcoin ETFs, your Ethereum ETFs that hold nothing but Bitcoin or Ethereum. They're set up as trusts and things like that on the other end, but they need to go through a special process. 1940 Act products, which the futures, Bitcoin futures, Ethereum futures, ETFs, and a lot of these filings now don't have to go through that same process. It's just like a 75-day period. And if
Mm.
the SEC doesn't basically tell you you can't launch, then you can just launch after 75 days, theoretically. That's not usually how it works. The SEC usually gets involved. I think that could happen with some of these. Like the SEC might allow some of these through and then say others, you can't do this. But what's interesting to me is like they talk about using CFTC futures in a lot of these filings, CFTC regulated futures. Typically, that means CME or CBOE, but there are no futures for XRP or Solana, which a lot of these filings are yet from CME. They are on Coinbase, and there might be some other crypto platforms that have CFTC approved trading for futures markets, but those markets aren't really that big. So it'll be interesting to see what the SEC does and says, like, they might, for all we know, say these markets aren't big enough. Or these issuers, like if you look at volatility shares, they filed for a Solana futures ETF back on December 27th. So their deadline is coming up not too far away from now, right? Beginning of March, middle of March. So,
Mm.
but again, we don't have CME Solana futures. The only Solana futures we have are Coinbase. So I don't know how the SEC is going to handle this. You asked like how liberal basically is this SEC going to be? What's this crypto task force going to do under Hester? I don't know. It's possible these things get approved and maybe these guys know that the CME wants to launch Solana futures and wants to launch XRP futures, which I think is true. I think they all do want to launch those futures.
Mhm.
So those things could be the first things to market. Other than that, right now, Litecoin is something that could come to market. That's the first thing up under that
Really?
19B4 process.
Litecoin?
Well,
Litecoin?
the problem with Solana and XRP, even if Hester decides that she does not think those things are security, you have the whole division of the SEC, the Division of Enforcement that has active lawsuits saying these things are securities, or like
Right.
they're appealing different things. They're calling XRP a security. They're calling Solana a security. And they're calling all these other things securities, right? So even if you're Hester and you think that those things aren't securities, can you allow them to list it as a commodities ETF in a trust wrapper as a commodity when you have another division? Can you even have your other divisions, division of corporate finance, division of investment management, division of trading markets, looking at these documents while you have the division of enforcement in an active litigation calling them securities?
What a
I
mess.
think that all needs to be cleared up. Litecoin doesn't have that problem, for example.
Mm.
HBAR potentially doesn't have that problem, but Canary, who's run by Steve McClurg, used to be at Valkyrie, hasn't done the full filings for the HBAR thing. So it could be that Litecoin is the next fully, spot ETF filing that comes through. But
That
again,
would
you come
be
back.
hilarious. That would be
Yeah,
just
it
ridiculous.
would be fun. But the problem is like how much demand is there for Litecoin? I don't know.
I mean, I
Almost
would have
certain.
said none, but Litecoin's marketing over the past 2 months has been genius, and they've basically turned themselves into a meme coin, and now it actually they've caught a narrative as a result of that. So,
I mean,
fundamentally, I don't know, but
yeah, they're also hosting a conference, which I just found out right after the Bitcoin
oh,
conference
really?
in Las Vegas. So like the Bitcoin conference ends and Litecoin is hosting a conference as well, which I don't know. We'll see how that goes. I might be there basically to talk about the ETFs. But you go back, the other problem is so like the way Bitcoin and Ethereum got approved is the CME futures contract, right? They said the SEC basically they need to approve something. They want to be able to know that they can look and find and single out fraud and manipulation in the underlying markets. And what they ultimately decided on was the CME futures market regulated by the CFTC was enough for them to look for fraud and manipulation in the underlying market so that they felt comfortable launching the ETFs. But what really got most people aggressive for the Bitcoin ETFs getting approved was back when BlackRock filed in June of 23. And what they filed was with the surveillance sharing agreement with Coinbase. And the SEC ultimately decided they didn't need that surveillance sharing agreement. That's not the first time it happened. Gemini had one when they first filed like over a decade ago with their Gemini platform. I'm sure we could get a whole bunch of these platforms online with an SSA. So I think that would satisfy the Litecoin concerns if you just get an SSA with Coinbase, Kraken, Binance, Gemini, you name it, right? So I think one, that's how that'll be settled. But all of these need to settle both of those things. You're going to need some sort of way to surveil the underlying market, and you're going to need to settle, is this a security or a commodity? So I mean, an act of Congress could clean this up, but who actually knows? So yeah, that's like the current lay of the land, and then we can get into the Rex Osprey filings, which I
Yeah,
think like
what
the
are they doing?
ETF nerd in me is like fascinated by this. Go ahead.
Yeah, tell us.
Yeah, so they are pigeonholing spot exposure into a 40 Act wrapper, which is like they're doing it. It's a complex, they're using a Cayman subsidiary that will hold the underlying asset of these products. And they filed for a Trump ETF, an Ethereum ETF, a Bitcoin ETF, Solana ETF, XRP ETF, Bonk ETF, and Doge ETF. So um, the way they're
Amazing.
doing this is
Incredible.
like a strategy that we've seen issuers use typically in the commodities world. So in the past, there's a lot of commodities ETFs that trade commodity futures, give you exposure, and usually they're typically used to hedge against inflation. They use for diversification of portfolios. But the way they're set up, they have to issue what's called a K1 because it's the underlying structure is basically a partnership. So what like some really smart lawyers and ETF firms figured out is they can do a Cayman subsidiary that holds those and wrap that in a 40 Act wrapper. And basically you can get the same exposure without having to do a K1. And that seems to be, from my legal, I'm not a lawyer experience, of what they're trying to do. Basically, they're complying with the 40 Act rules and regulations to try and launch spot exposure to these things. They'll also likely have some derivative exposure as well. So it'll be interesting to see what the SEC does. Again, that's because they're not going through the 33 Act, or they will, because they're going under the 40 Act. It goes to that 75-day clock that I talked about with the volatility shares futures, the pro shares futures contracts that are filed, things like that. So it'll be very interesting to see what the SEC does. Are they going to say, all right, this is good enough, you can launch these under the 40 Act? And then all of a sudden, they'll be the first ones out with some sort of spot exposure under this. The one thing I would say is I know Hester's pretty liberal, but is she going to really let them launch a Trump, Bonk, and Doge ETF this way? I don't know. So, I mean, Kathy Wood was just on her show like 30 minutes ago. We have a ETF show on Bloomberg News. And my colleague, Eric Bartunis, asked her the question, like, what's the SEC going to do? And she said, I think what the SEC will do under this Atkins SEC is, as long as they qualify with the 40 Act regulations, they're going to let them through. I don't know, maybe. I mean, I would say it sounds like, from everything I'm seeing, it looks viable that these things could actually get approved. The one thing I go back to is, again, you have Solana XRP in there. Again, you have divisions of the SEC, the Division of Enforcement, calling them a security. I think you kind of need to get that cleared up before you allow these things in the ETF. But I don't know. These are not filed as commodities trusts in this case, right? So this might be another way to satisfy that. Who knows? I'm just guessing here. I'm spitballing. I need to form a more concrete opinion on this. And then again, I don't know what the Trump coin launched like less than a week ago, and we might have an ETF in April. I don't know. I mean, I'm all for the SEC liberalizing some of this, but that also might be a bit of a step too far for me, even as somebody who's very libertarian minded on this front. So it'll be very interesting. Look, these ETF issuers, they're lawyers, they're very smart at trying to pigeonhole the SEC. And if you give them an inch, you give them a little opening, they're going to blast through it. That's how we have leveraged single stock ETFs, by using similar strategies to this, because technically they comply with all the rules, even though you can maybe argue that they don't apply with they apply with the letter of the law, but not the intent necessarily. But here we are. We have a bunch of, 2x inverse and bull levered MicroStrategy ETFs, Coinbase ETFs, you name it. So we could see a whole host of these crypto ETFs coming through as well.
So if we just take 30,000 foot view here, what we're seeing is we got new SEC, we've got a lot of companies that are very excited to launch crypto-based ETFs. The filings are increasing. We got some really smart lawyers that are going to try to create some loopholes and do things in different ways to get to market faster. So the likely outcome of this is, yes, we're going to have more ETFs other than ETH and other than Bitcoin. Like that feels clear. Would you agree?
Yes, that's going to happen. Whether or not it happens in 2025, I guess is still up in the air. My bet would be it does happen in 2025 for some of these coins, but it will undoubtedly happen within the next 18 months would be
Right.
my assessment.
And so I think the main what this does, the impact of all this is that it brings flows, right? And as you said, who knows what the demand for a Litecoin ETF is? Does that bring much flow? I don't know, right? But that's really, if you're an investor, you're sitting here, you're thinking, okay, great. If I hold Solana, there's a Solana ETF. There's likely to be more flows into Solana, right? More buying pressure, increased price. My bags go up. Great. Let's just chat about the flows of Bitcoin and ETH, since those ETFs already exist. I know you can't necessarily predict the flows of these future ETFs, but when we look at Bitcoin and ETH, what are you seeing from those flows? Because one thing that stands out to me is obviously Bitcoin ETF, like just an insane year. Like you can give us the stats, but I mean, just like no ETF has ever done that before in history. And everybody's kind of downplaying the Ethereum ETF because it didn't do what Bitcoin did. But it still also, from an ETF perspective, had a tremendous year. And I'm sure all the creators of the ETF, BlackRock's Ethereum ETF, it's doing great, right? So I think maybe a lot of people are missing that the Ethereum ETF is actually doing better than most people think. Would love to get your take on that.
Yeah, so everything you said is correct. I mean, the Bitcoin ETFs blew the doors off of everything. And honestly, so there's some people out there that say the Ethereum ETFs are doing well. They up until November, they really weren't. I mean, you look at BlackRock, it's had a very successful asset gathering process. Some of the other issuers as well in the Ethereum space, but for the most part, it was vastly offset. They had 600 million in net negative in net outflows up until Trump got elected, essentially, because of money pouring out of Grayscale's ETH. So yeah, Grayscale, a lot of money went to ETH, like their mini trust. ETH A from BlackRock did very well. Fidelity's ETH product did well. I mean, a lot of ETH products actually did gather assets, but most of it was like basically catching the Ethereum outflows from ETH. That is until the election, and then money poured in, right? Like a lot of money came in. They went from $600 million in outflows and all the way to, I mean, like $3 billion in net inflows, right? So that's like a almost $4 billion swing essentially in a couple month period. And they're doing pretty well this month as well. Who knows how long that will last? So yes, that has been a success. I don't know how much of a success it will be. We're still early days, but again, it's a huge success compared to where we were for the first. They launched in July through early November. They were not doing all that great. So, but the going back to the other coins, right? So one, Bitcoin, they've taken in 40-ish billion dollars since they launched, essentially 30 upper 30s on net inflow basis, even accounting for the outflows of GBTC, which again dwarfs Ethereum. And I think that's going to be the trend, even if we see a whole bunch of these other ETFs. A lot of people are clutching their pearls, like particularly in the TradFi world. Like, I can't believe the SEC might actually allow all these to come to market, particularly the meme coins. A lot of people are not happy with that. I kind of get it, the gist of it, like why you don't like it. But at the end of the day, if it's going to be a free market, the market will decide if there's any value in these ETFs, right? And I think what we'll see is kind of similar to what we've seen in the TradFi space, right? Even if you look at commodity ETFs, for the most part, they're dominated by gold ETFs. Silver ETFs are also doing decently well, but for the most part, most of the money is in gold ETFs. But there's also ETFs, palladium, platinum, nickel, the beef, pigs, corn, wheat. Like there's a lot of ways to get exposure to different commodities, and they're successful in their own categories, but they're dwarfed by the $130+ billion in US gold ETFs. So at the end of the day, I'm not so sure that these ETFs are gonna, like a lot of people who are like super bullish, like their individual coins, and if we see like 50 different coins get ETFs over this Trump administration over the next 4 years, the ETF money pouring in, it's not going to be the same as it was for Bitcoin. Like the money, for the most part, it tends to be like a funnel in the sense the biggest things, the most common things are at the top, and then all these other coins are going to be down near the bottom, and I don't think they're going to get near the level of interest. They might see a ton of trading, But yeah, overall, it's been a smashing success for everything, particularly since Trump's election. And I think the Ethereum stuff makes sense because if he's really going to do things to allow decentralized finance to flourish, I think Ethereum could theoretically benefit more than Bitcoin. Obviously, Bitcoin, you're benefiting from a whole host of things, potentially a strategic Bitcoin reserve, you name it. But I mean, just softening like regulations, coming up with laws around how to handle decentralized finance and these tokens, what's the security, what's the commodity, things like Ethereum and their layer twos and Solana and even XRP and other things like they're going to benefit possibly more from this sovereign regulatory environment than Bitcoin. Because honestly, I think Bitcoin would have been fine even if Biden was reelected, right? I think it would have been these other coins that would have had a hard time under another, or Kamala, I should say, under a Harris administration. She was definitely not going to be anywhere near as pro crypto. Might as well have been continued a lot of the headwinds. And I think even Bitcoin, honestly, if you were looking for Bitcoin to outperform the other assets, you might have benefited more from Bitcoin, from Harris winning if you were just going off of that spread, because I think a lot of the rules and regulations would have been far more hindrance to everything else but Bitcoin.
Right. Just while you talk about, there's a few things I want to unpack there, but one of the things you mentioned, and I tend to agree with this thesis, is so let's say we get 50 more coin ETFs in the next 4 years. You pick the time frame, whatever. Let's say it happens. Seems likely that it'll happen like within the next 4 years. Doesn't necessarily mean that that's where the flows are going to go. More likely, where I see the flows going is to some basket or some index ETF. Tell us, because there is some index and basket ETFs that are up for approval right now. What do you think the likelihood of those is? What are your thoughts on those?
Yeah, so those are on that list as well, and I kind of skipped over them when we talked about the ETFs before, but there's a whole bunch out there. So Hashdex and Franklin actually got approved for technically they're Bitcoin and Ethereum ETFs right now, but they're going to be basket ETFs. They have language in there that as assets are approved for the ETF wrapper by the SEC, they will add them to the ETF basically as a basket. You have two applications. You also have Bitwise that filed for this. I don't think they've been approved yet, but it's essentially the same thing. They're going to do Bitcoin and Ethereum and potentially add other assets, or it might just be Bitcoin and Ethereum. I should look into that a little bit more. But then the main ones that I'm watching are Bitwise's BitW, which is their crypto 10 index, and then also Grayscale's digital large cap ETF. So those are due for final decision in July 2nd and the end of July. And I think those have a decent chance, largely because they're like 85% and 90% in varying levels. So the Bitwise one is like 87% Bitcoin and Ethereum, and the rest is a whole bunch of other, like 8 other altcoins. And then the GDLC one from Grayscale, they're filing again to move that trust, convert it into an ETF. That one is 90% Bitcoin and Ethereum. So even if there's still these issues that I was just talking about with whether or not these things are securities, are they commodities, are they, whatever, there's a lot of clarity that needs to come to that space. I could make the argument that it's such a small position in the portfolio that it satisfies the SEC rules. If you look at a lot of the investment strategy of these ETFs, they're all going to say this product will invest at least 80% of its assets in X, Y, or Z. And that's basically, that gives them a lot of leg room to like go into cash or other products that don't necessarily fit exactly what the principal investment strategy said it was going to do. And there's also this rule about like you can put up to 15% of your investments in the 40 Act in like more liquid products. So maybe you could argue that these kind of fit in there. So there's like a lot of gray area in that sense that possibly those things could actually just uplist to an ETF. I don't think it's guaranteed, but I think there's a lot to be said about like just allowing these things to uplist to an ETF. Something that Gensler wasn't in agreement with us on is I thought GBTC, ETH, a lot of these trusts, just let them uplist to an ETF. They were trading at discounts and premiums. They were inefficient for all investors. It basically was allowing AI or accredited investor and qualified purchaser people, high net worth individuals, to take advantage of retail because they're creating shares and then selling them at a premium to retail investors who can't get exposure to this in the TradFi rails. And like in my mind, it's just like, honestly, at the end of the day, just let these things list as an ETF. Like I know you don't really like them necessarily, but like it's an efficient wrapper. Trust the ETF issuers, trust the ETF market makers to find an efficient market for these things. Because right now, the way people are getting exposure just really isn't the most efficient way. So I think those things will be successful products. I think there's going to be a lot of people that'll be like, I'd rather just dump it into this ETF. I'll put 4% and 5% of my portfolio into a basket of crypto assets and be done with it. But for the most part, Advisors, they don't do that, right? Like we see this, and what they'll do is they're like, I want to control how much Bitcoin, how much Ethereum, how much of these other assets I hold, particularly for my clients. Because imagine, so this, we see this in TradFi world too. If you go to an advisor and he just puts you in a total stock market fund rather than putting you in like segregating out the domestic US or maybe domestic large cap and then domestic small and mid and then international, like you get like 6 different ETFs on that list by doing it that way. Or they just give you the total stock market index, which you could probably like argue is just as good and arguably cheaper and more efficient because it's simple. But like what advisor is going to want to do that and go
Why
to their
would you use the advisor then, right?
paying you? You have me in a
Yeah.
bond ETF and an equity ETF and then a basket of crypto ETFs for 2%. Like I can do this myself. I'm out.
Mm.
So what advisors and people creating portfolios, one, they do like to be able to customize it a little more, but also they want to basically be able to say like, we're controlling this. We're inputting our views into this decision. So for that reason, I think basket ETFs will be successful, but not as successful as the standalone, individual asset exposure.
Mm-hmm. Okay, so you bring up advisors, which brings up the question that I think I asked you this last time we had you on the show a few months ago back at Permissionless, which is like, who is actually buying these ETFs right now? When we look at the large institutions that control most of the money in the world, right? Are they buying these ETFs yet? Are they still to come? Are advisors actually selling these products? Because I don't think most of them are really yet. Like, what's the current state versus everybody? What everybody really wants to know is, everybody saw BlackRock say 2% Bitcoin, right? And everybody in crypto was like, okay, great. Is the whole world going to do 2% Bitcoin? And if they are going to do 2% Bitcoin, certainly aren't fucking there yet, not even close, right? So if everybody did do 2% Bitcoin, well, it would make sense to front run that, right? Like, what are your thoughts on where these flows are coming from, and are the institutions buying these ETFs or buying at all any on-chain products yet?
So it's funny, we actually kind of know the answer to this. I said this last time, but like if we we have the ability on the Bloomberg terminal to see like what the holders are, the official holders of record. Not everyone has to report, but if you're an institution of certain size or you're another fund or you're an advisor network, you kind of have to report how much of the assets in these ETFs you hold. And only like 16% of IBIT, for example, do we know who holds it. And a lot of it is market makers, hedge funds, things like that. I talked about this last time. What a lot of hedge funds are doing, there's a term premium in the Bitcoin futures contract. So basically, if you're investing in Bitcoin futures and that's the way you're getting your exposure, you have to roll every month. So you're going to buy it now, and then you have to sell that contract or take delivery and then buy the next month's contract. And what people are doing is they basically are selling those contracts on the open market and then buying the ETF. And then all of a sudden they have a neutral position. So they're only earning the difference between the futures contract price and the underlying Bitcoin price. And there's a premium there. So people are earning like double-digit yields essentially by doing this arbitrage. So it's a cash and carry trade, a basis trade is really what people would call it. So we're seeing a lot of hedge funds and market makers do that type of trade. There are advisors coming online. We're seeing more and more of that. But the problem is most of the advisor networks, the ones that have bought this, they're like smaller individual RIAs, registered investment advisors, where they're not in this massive shop. They're not at a wirehouse like, Morgan Stanley or UBS where they control trillions of dollars. There's a lot of rules and regulations to get approved to go on there. So smaller shops, yes, they're buying this. It's a lot of retail that have been buying these ETFs for their IRAs and what have you. It's a lot of hedge funds doing that basis trade. But the next wave of growth is probably going to be the institutions and the wealth advisor network. And you talk to any of these issuers, you name it, BlackRock included, they're working towards getting these wirehouses, these broker dealers, these advisor networks to approve these things to be sold on a solicited basis, or at least to certain people. So, right, we know Morgan Stanley, the most vocal one that I saw, they don't have to announce when these things are approved. Like they're private networks. So it's not always as easy to figure out who has these things approved. But in many cases, it's like, one, the way you get approved, I think I said this last time I was on, like you can either A, no one can buy this no matter what. B, you can only buy this under a whole set of certain circumstances. In many cases, it's like you can buy it on an unsolicited basis, which means like I'm a client, you're in my advisor, and I go to you and I say, I want Bitcoin in my portfolio. You can buy it for me then. But
Mhm.
you can't come to me and be like, I think Bitcoin, including BlackRock agrees with me, should be 1 to 2% of your portfolio. Most of those networks are not allowing that yet, right? No, most of the wirehouses. Some of them are allowing it, but they're saying you need multi-million dollars invested with us. You also need to be a high risk seeking individual and the ability to take high risk. So you have to meet all these other criteria before you can sell it to me as that individual. So there's a whole bunch of processes going down. They're chipping away at getting these approved on those platforms. There's a lot of advisors that want to buy these things. I will tell you, there's a lot of advisors that I talk to that think this whole space is a bunch of BS, have no desire. They're never going to buy it. But there are people out there that want to buy this and put it in their client portfolios. There's a lot of young people who have advisors, millennials particularly, that want to see this as part of their investment portfolio and they want exposure to it. So, I mean, I rambled a lot there because there's a lot of nuance, but that's the next wave of growth. Are we really going to see a lot of these wirehouses, advisor networks turn these things on? And then how much money is going to come from that? How many people, advisors, are actually going to put their clients in those things? So going from
Mhm.
unsolicited to solicited and all these different things could be a tailwind for assets.
And
For the
that's all stuff that's like that's likely to happen soon. Like that, I know that a lot of those processes take years, but I would assume that that has already started when the Bitcoin ETF got approved.
So I don't know for certain, but what I will tell you is like usually it takes like you need 3 years of history, you need a certain level of assets, certain level of
Mm.
liquidity. A lot of these ETFs have met that. There's like this whole due diligence process that these platforms and they make sense. You want to make sure you're not putting money in an ETF that's going to liquidate in a year from now, that's going to do something weird, that's going to go wonky with this trading strategy. They're understanding the risks of like the custody of Bitcoin and Ethereum and what have you. So there's a lot of due diligence that needs to happen. From what I understand, a lot of places have expedited that, like they're pushing through as quickly as possible. But like I said, in some cases, like 3 years, like it could take that long. So we're a year in, right? So even if the platforms that have approved these, that's moving pretty quick for some the
Mm.
way that some of these wirehouses work. So we could be waiting another couple of years. I think this year's going to be an unlock for some of these, but we're not going to. Everything's not going to be on board yet.
Mm.
Even probably by the end of 2025. So I mean, it's another tailwind. It's another something that's growing, and we could see interest from that area. But I don't think it's necessarily going to be like by Q2 of 2025, 75% of wirehouses and advisor networks are going to allow these things to be sold on a solicited basis. Like that's not going to happen. I think it's going to be gradual. It's going to be depending on your risk, depending on your assets, all these different things will allow you to sell it to them and what have you.
Yeah, super helpful. Thanks for breaking that down for us, James. Final question before we let you go. I got to ask about ETH staking. Is the ETH ETF going to get staking? What are you hearing there? I'm starting to hear talk about it. Some people saying it's coming soon. Some people saying it's never going to come.
I'll take the other side of it's never going to come. I mean, it's going to come. Whether it happens in 2025 is a different question. Basically, in the 19B4 approvals, those things I talked about before, those filings for the ETFs, you're not allowed to stake it. They said that in the approval. So I think you would need to file another 19B4 and go through that process, which could take 240 to 260 days from filing. So that's how long it typically takes.
And
Now, that
nobody's filed that. Nobody's filed that yet.
no, not yet. You might wait till Atkins comes in before you file that. I don't know. Yes, the issuers are pushing the limit. Like I pointed out, what Rex and Osprey were doing, they're they're pushing the SEC here. So you got to be careful. But like, I think that we're going to see this in 2026. The latest would be my guess. The other thing I would say is a lot of these ETFs I talked about, like that timeline. We haven't seen 19B4s for a lot of those other products, for spot products on with XRP or Solana. Like the Solana ones that were filed months ago were actually outright rejected by the SEC. They basically refused to acknowledge them. But if we do see those filings come through, the way that this process typically works under the SEC, even before Gensler, was if it's a new novel asset or new novel approach that needs to go through that 19B4 process, for the most part, they take the full time to approve. They take to the final deadline. We saw it with the Bitcoin ETFs. We saw it with Ethereum ETFs. You see it with a bunch of other stuff. They take the full time to do this. And that's not just because like Gensler wanted to do that. That said, that's just kind of precedent how the SEC usually handles these things. If Atkins comes in and wants to move quick, he could do the first deadline typically is 45 days after it hits what's called the Federal Register. So like if he really wanted, he could approve those things as quickly as possible. There's nothing stopping him. I just think they'll have so much other stuff on their plate. that they'll probably just take the whole time to study this and do nuanced analysis about what staking would look like. How much of the ETF could you actually stake due to liquidity concerns? There's a bunch of providers out there that are trying to come up with ways to like have staking pools so that you can have same day liquidity for something like the ETFs. So there's all these nuances that are going to come out. I think staking is going to be a huge part of these ETFs in the future. I think it's going to happen under this SEC administration. I just don't know how quickly it's going to happen. I think the other thing that's going to happen is in-kind, create, redeem, but there's a lot of nuance there. Right now, basically, you can only create or destroy shares in an ETF by doing cash. So most ETFs, like you hand over the shares of the equity and you get back the shares of the ETF. But the Bitcoin and crypto ETFs, like you have to do cash, and it just adds a whole bunch of other layers. The problem is right now, the SEC basically said those broker dealers can't touch Bitcoin. So that's why they have to do cash. So they're just using other ways to create the markets, and they're giving the cash to the ETFs themselves, the ETF issuers, and the issuers are either themselves going out and buying or using third parties like Coinbase Prime and things like that to get exposure. So there's a lot of nuance and things that I think are going to be cleared up and smooth in this transition under Atkins, but I think it's going to happen rather quickly. I just don't know how quickly it can happen. Some of it might require like serious rule changes from the SEC, particularly something like that crypto task force would handle, or a lot of stuff will be sped along, in my opinion, if we actually get a market structure bill. Who the hell is in control of crypto digital assets? Should it be the SEC? Should it be the CFTC? Should it
tell
be
us already?
Yeah, like who knows? Like there are definitely digital assets, that are tokens that I think look very much like securities, and they're just define what they are and decide who's in control of them. Maybe it's the CFTC dual controlling this. Maybe CFTC has more control. So I think all of that will help like push this along and get better answers. Just be careful what you wish for. Like I said, some of you guys out there in this space, you might not like some of the rules they come up with, but it is what it is.
Things are going to move fast this year. That's for sure. 2025 going to be a big year. James, thanks you so much for joining us today. Appreciate your time as always.
Yeah, thanks for having me. This was great.
Thanks for listening in, everybody. Have a wicked awesome day. We'll see you again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.